with private equity today is that they're all over-evaluated. They all hold companies and assets that have an evaluation more than what they're actually worth. And that's because when you look at the S&P 500 and the prerequisite to get in, it tells you the minimum requirement to get into the S&P 500 is $18 billion of market cap. And I've already shown you about 20 companies that don't even get close. They can't even sniff $10 billion worth of market cap, and yet they're in. And they're not falling out. But private equity holds these guys on the books. And before they ever give you true evaluation for your company, these are evaluations from 2021. We're in 2024, going to 2025, and you're going to tell me when we want to reset this clock. We're about to reset the book. And when you reset the book for valuations for companies and for expected earnings, you're on an inflationary dollar. So not only is your $18 billion a farce, your $8 billion that you think your company's worth is not worth $8 billion. It's of yesteryear. $8 billion today is $5 billion 3 years ago, 4 years ago. Believe it. That's the inflationary dollar. You don't believe it? Jack in the Box tacos. That's my barometer. That's my benchmark. Jack in the Box tacos were at 99 cents 3 years ago. They are $2 today. That's a 100% increase. And I ask you Wall Street, tell me why. Tell me why no one's out here pounding the chest and beating the street about GameStop being up over 100% in the last 3 months. The one company that's up 100% over the last 3 months versus the rest of them that are down 20% over the last 3 months. The whole market is down 20% over the last 3 months. And I'm talking about every blue chip, every tech sector, every semiconductor. I don't care what they are. They're down 20% over the last month and a half, 2 months, 3 months. GameStop is up 100%. So how much more do you need to fall down to find out how high GameStop's going to go? Is this the delta to the whole market? I think so. I'll put my money on it because empirical evidence, and that's something that you can't defend yourself against, empirical evidence tells you that GameStop is worth more than what they tell you it's worth. Yes, 100% increase. Where are you at, Michael Packer? Where are you at, Jim Chanos? Where are you at here? I'm asking anyone out here to tell me what my GameStop is worth, because I just saw 120 million shares sell for $31 a piece, and it's inflated with the, there's commission tied to it. So Jeffries is making money, GameStop's making money. Somebody paid that money, and you're going to tell me my stock's only worth $24 a piece. Peace. Okay? Peace out. That's what I'm telling you. You're full of shit, stock market. You're full of shit, Wall Street. But I'm not going to let people forget. So I'm going to wake up every day. I'm going to walk my happy ass here to the camera and the videos, and I'm going to tell you, GameStop's the best investment that they don't want to tell you about. But if any of those investments, any single one of a blue chip was up 100% in the last 3 months, it would be all over your damn TV screen. But nowhere do you see GameStop is up. GameStop's it. No, instead you see 10 other stocks to buy other than GameStop. Oh, Roaring Kitty's a liar. Ryan Cohen doesn't know what he's doing. It's all of the above. It's everything to be negative on the stock. Well, you know where that gets you? Citron Research. Do you know where that gets you? Andrew left. Andrew, I have no money left. Andrew left. Citron Research was just sued today by the SEC for $20 million. And why? Because they're putting out false information and betting against it. Hey guys, we're going to hold this stock to $60. We're going long. And the minute they end that interview, they go and sell it at 20 while everyone else is buying it. And they pocketed over $20 million worth of profit. But remember where this stems from. If you looked at Connect the Dots, there's a series on YouTube. It's me on YouTube. It's Connect the Dots. There's 74 parts. Go look up part 72. Anybody remember part 7? It was a live stream that I did. It was about Anson Funds out of Canada, a hedge fund that manipulates info via cannabis stocks, via AI stocks, and of course GameStop. And they partnered up with Citron Research. They got fined $2 million. Oh, wow. And what happens over here with Citron? They get fined $20 million. That's still a slap on the wrist because they lied about GameStop. They lied about GameStop 4 years ago. They're lying on other companies today, and they're doing it the same way that I've been showing you every damn research company does it. They put out a FUD piece. They put out this multimedia piece that everyone grabs and runs with. They tell you this is what the company's doing, this is where they stand, and then they go bet against their own same sad story. This is what's happening with America. Oh, you don't believe it, guys? Fuzzy Panda puts out a research piece. Hindenburg Research puts out a piece. Muddy Waters puts out a piece. Citron Research puts out a piece. And they manipulate markets and outcomes, and they bet against them on the other side. SEC finally following the breadcrumbs to where we put them, but go watch Connect the Dots Part 72. And that's this channel telling you. Because I've been out here, I've been studying the stock market for a very long time. You can call yourself a Rhodes Scholar at this point. Remember, you go to college for 4 years. You study economics the whole time? No. You probably take some prerequisites that you don't need. It might be Math 10, who knows? It might be English 1A. It might be calculus that you'll never use. But this economic course that you've been taking called Marantz, it's been 4 years strong, 3.5 years strong. Maybe you're ready to graduate. Maybe you're ready to graduate to see exactly what it's worth. It didn't cost you shit, guys. I do this for free. I do this for fun. I study economics for fun. It triggers me. It makes me excited. When I can go out here and I can tell you little updates. Oh, don't worry. My life contains restricted information, apparently, according to TikTok. But when I can come out here and tell you that U.S. home prices hit an all-time high record, $430,000 is the average price of U.S. homes, the highest it's ever been. Do you know why that matters so much? Because you can't buy a house. You can't buy a house at the rates they're at. If the rates were sky high, the prices should be coming down. Inventory should be what? Available to you, and it's not. This is the housing crisis that no one tells you about, because it's not about a housing crisis. It's about a loan crisis. It's a debt crisis. Okay, when they don't let you borrow money, no one's qualified to borrow money. We're at a standstill, guys. This money's not going to move. I use the word churn. It's not going to move. It's not going to churn. You ever churn butter? Well, revenues don't churn. Not in the banking sector, not in the financial sector, not when housing is capped out. But the QQQs, the NASDAQ, trading below the 50-day moving average for the first time in, who knows, in 3 months. Let's go look at QQQ. Oh, what does Marantz know? He doesn't know. Let's go. We're going to do this tonight. I'm pumped, guys. I get pumped up like this, and it's hard for me. It's hard. Pause. This is your NASDAQ, okay? Now, as you see it, this tracks your NASDAQ right here, from 503 high just 2 weeks ago, guys. 2 weeks ago on the 10th, all the way down to whatever this is, 462. That is right there. That is almost 10%. But to have that far of a drop, to go below the 50-day, now we're going to keep falling. Are we going to keep falling because the level of support was at 430? We still have 30 more points to drop, guys. That's going to be your 22%. That's going to be there for you. But as we look at, and I'm going to put this on my thing. I never have this one on there. I should have it on there. But we go to my watch list. Right, guys? And we talk about this because we look at the whole market. You guys cannot just stare at the stuff you guys want to stare at. Oh, Marantz, we're talking about this stock today. Shut up about stocks. It's too easy, guys. It's too easy to look at something like this. This is Disney. This is Disney. And it's not meant to look like the damn actual Disney castle, but it does. I can draw the Disney castle out of this damn thing. 123 up here just in April, all the way down to the ground right here where I told you it's going to sit out. I told you have support here right at 88, 89, and this is going lower and lower and lower. Earnings are coming up. Earnings are going to be on the 7th. So you give yourself 2 weeks on earnings, and you better hope and pray they're great. And even if they are great, do you think you're getting back 123? Or you think you're getting it all back? It doesn't work that way. In the world of investing, it doesn't work that way. You don't get it all back. When you lose, you have to work twice as hard to get back your losses. So if you're buying Disney now, it's an all-time low that it has been. Because watch this. Go to the weekly chart. Look at where Disney is. Previous all-time lows all the way back to what? 2016, 2015, 2016, 2015, and 2015. That was 10 years ago. 10 years ago. So yes, am I getting Disney at a great price? Probably. Is there a dividend yield? Absolutely. Less than 1% of the stock price. That's a problem. That's a problem. But I'll tell you what, Disney is a company I'll never invest in. I don't support the company. I'm just showing you there's corrections within the market. Nike's still falling apart. Let's go ahead and look at Nike. Nike had a whole reset that everybody wants to pay attention to, but look at this massive drop off because they're telling me Nike products aren't selling the way they used to. Oh yeah, there's nothing to push out, but Nike's trading at levels of 2018. 2018, after all that pump that you've seen, we've taken it all back. The market is giving it back to you. To go from 173 down to $72 on Nike, that's a $100 drop per share. You have room to gain, but it's going to take you how long to get back there? It's going to take you forever and a day. This is the world we're looking at. You're looking at buying opportunities for people that have cash. But is this the bottom yet? It's not. It's not, because there's collateral weighed against these stocks. The collateral is the blue chips. The collateral is the Mag 7. So until you see Mag 7 start falling apart like this, it's not falling apart. It's enough of a retraction. It's enough of an honest, hey, let's get back to where we were. Previous high from May, previous high from March, this time frame here. They broke past, they pushed it past, comes back down to reality, so you're still here. So Microsoft, 468 before, 425 today. That's a drop off of 10%. Yes, 10%. I'm not good at math, but I'm really good at that part, right? So guess what? Let it drop off another 10, and maybe you get more back to where the real price was, down here in the 390s, below 400. That's what I can see for Microsoft. Reality setting in, because once they start selling off, remember, I call it ring around the rosy. That's all these guys unlocking arms, and they're playing Red Rover. Send Marantz right over. I'm going to run right through those arms, bros. I run full speed on that damn game. I used to win that shit. If you guys don't know the game, I'm sorry. I don't even know how we played it in elementary school, because you're meant to break people's arms when you play that damn game. But anyway, Microsoft. Yes, I know. Listen, there's a fear out there. I'm going to talk about this fear right now. This is called the AI fear. AI not standing for Allen Iverson. AI is standing for artificial intelligence. There's a world out there that are telling you that AI is the next everything, okay? We're also in an AI bubble. I'll give you that. But back in 2000, they had it right. They said the internet is everything. We need to invest into the internet. And they're absolutely correct. But they didn't know how to do it because they were over-evaluating the whole bubble. They don't know how to invest in the AI because they don't know how to evaluate the whole bubble. Do you know what it is? Do you know what the fear of missing out is? All of these companies with cash are being rewarded for investing into AI. But just because you have cash and you're actually buying something doesn't mean it's a good thing. I'm telling you from my standpoint, because GameStop has the most cash per capita, per everything, and you would think, oh, let's go invest money into AI, and just the trigger word AI is going to make people invest and it's going to go up. But that's not it. You have to have a way of producing return of investment. That capital allocation that you have going towards it is a fear of missing out for all companies. Listen, every company out there, I don't care if it's Meta, I don't care if it's Microsoft, if it's Google, Amazon, they're all overspending for the I don't want to miss. You see, they have to overspend. They have to, because you might miss AI. And if you miss AI, guess what happens to your company? You drown. So you're at the mercy of the gods. And don't let me speak like there's more than one. But you're at the mercy of the tech sector itself. Semiconductor, Taiwan. You're at the mercy of the growth that doesn't exist because there's no competition. There's only one company setting the price, and the price is elevated, and they can ask you anything. It's a monopoly per se. And that's NVIDIA, guys. NVIDIA is a company that goes from nothing to something in the span of, and I've known NVIDIA my whole life, guys. I'm a gamer. I buy gaming chips. You guys know what it is. Graphic cards, you would go to NVIDIA, you buy them, boom, there it is. I have an NVIDIA graphics card, and it could be a 1660, it could be a 3100, it could be a 4100. Right now they're making what, 49s, 47s? I don't even know. But that's not the company that they're dealing with today. They're dealing with AI. And everyone out there is overspending to stay just afloat. Just so you know what? I don't care what I spend. I don't care what it costs, because I don't want to miss it. I saw what happened to the .com bubble. I saw people miss it. I saw people not spend it. They had something to fall back onto. They had their legacy business. But when it all settled out and the ashes settled, right? Whoever had cash was able to buy that technology and that placement later on. When there's competition created, when there's a way in, you don't have to be the first to the table. You just have to get there. That's it. I'm a firm believer GameStop is not spending money, not merging, not acquiring things, because they are extremely disciplined. They're not in the place where they owe people money. They don't have covenants. They don't have lenders. They don't have anything like that. This is why I'm invested with GameStop, guys. They are mature about their investments. See, a Ryan Cohen in his 20s probably would have chased a dream. A Ryan Cohen in his 20s probably would have chased infrastructure and build it like he did with Chewy, and then sell for top dollar at the time, and then go, oh my God, I could have just held on to it and I would have made billions. Billions. See, when you're in your 20s, guys, women, listen up. Unless you want to fix it, unless you want a project, unless you want to struggle and grind, go get with the guy in his 20s. And build it with him if you want. Or wait till he says, oh, he matures. Men don't mature. No, men get tired. Men get tired of getting their shit kicked in, of treating people wrong and then realizing this is the outcome. At some point, men just go, you know what? I'm going to do what's right for everyone, not just for myself. That's when that man realizes his net worth. That's when that man realizes his stance in life. When he grows up, when he's not distracted by the girl at the bar, when he's not distracted by the way someone dances, and or can admire both and say, you know what? I'm good where I'm at. That's investing. That's GameStop today. That's Ryan Cohen. Ryan Cohen is 38, 39 years old, and what's he doing? He's not getting distracted by the dancing girls. That's going to be any other company out there telling you, we want to partner up, we want to do this. Nope, I'm going back to work, and I'm working for free. And when I get there, there's still a job for me. Realize what you own. Realize who you're invested with. We are doing the right thing at the right time. When the whole world is overspending to stay in what they call keep up with the Joneses, they're all going to fall flat on their face. They're either going to have to file for bankruptcy, sell off a penthouse or two. They're going to have to do something to over-explain what they were spending and why they were doing it. There's always a darling. There's always someone who's going to make it. Always someone who's going to make all the money in the world, and they're going to be the billionaires. But there's people out there that are going to be smart about it and invest the right way. That is GameStop, that is Ryan Cohen, and that's who I'm following. I hope you guys are following. I hope you understand what I'm telling you right now. The top 10 companies in America, top 7 companies in America are all invested into each other with the idea that they can hold up this whole market, waiting for interest rates to come down. When interest rates come down traditionally and unemployment goes up. I don't know why. I don't know why it's correlated this way. I'm not the macroeconomic genius, but I study it. And I study trends and see the way the macro flows. I'm telling you guys, we have an issue coming up in September. We have an election and we have a new stance. Here's the optics. Here's what we want you to look like. They already want you to make you think that you're in a great environment, a great economic environment. Well, guess what? If it was so great, we wouldn't be doing the gymnastics we're doing today. But are you doing gymnastics? Are you guys balancing your book? Are you guys saying, you know what, we're not going to eat out that much. Oh, this bill's not going to get paid. Because I don't care how much money you make. You're paying more today for things everywhere around the world. But if I could make the money I make today 10 years ago, 5 years ago, I'd be in really good shape. But I'm not. Don't worry, GameStop's doing great. They're doing great. Ryan's doing great. I pray he does nothing. I pray he doesn't buy a single thing.